Hello, everybody, and welcome to today's Dynamics 365 Tech Talk. Today's topic is inventory closing in D365 supply chain management. My name is David, and I'll be your moderator today. We're broadcasting this session through Teams live events, and the audio can be heard through your device speakers. This session is being recorded on the behalf of the Microsoft Corporation. When you join this event, your name, email address, and/or phone number may be viewable by other session participants in the attendee list. By joining, you're agreeing to this experience. The recording will be available on the Tech Talks Community Dynamics page within 5 business days. If you have questions for the presenters or need support, please use the Q&A panel located on the right side of your screen. Our presenters will be responding to your questions in chat during the Q&A segment near the end. Thank you for your patience during these announcements. Presenting for us today from Microsoft, we have Anne Krupke, Senior Fast Track Solution Architect, and Rachel Profitt, Senior Fast Track Solution Architect. Rachel, over to you to kick us off today.
Thanks, David, and thank you everyone for joining. Good morning, good afternoon, good evening, wherever you might be joining from. We're so excited that you've joined us today. And for those of you who are returning to our series for the 5th time, we applaud your tenacity. For those of you joining us for the first time in our series, welcome. Let's get started with some quick introductions. I'll let Anne introduce herself.
Thanks, Rachel. My name's Anne Krupke. I am a Senior Solution Architect on the SCM Fast Track team here at Microsoft. I am so excited to be back here today talking about inventory accounting in D365. You can see my email and my LinkedIn here if you want to reach out or connect with me about our mutual love of all things cost management or anything else. Please don't hesitate to reach out.
Thanks, Anne. My name's Rachel Profitt. For those of you that don't know me, I'm also a Senior Fast Track Solution Architect based out of the Denver, Colorado area. I'm on the Americas team. I've got my contact information here on the slide, and I do invite you to follow me on Twitter, check out my YouTube at Dynamics 365 Unboxed, connect with me on LinkedIn, or follow my blog at dynamics365lady.com. This is the 5th Tech Talk in a series of now 8 Tech Talks that will dive into the details of inventory costing in Dynamics 365 supply chain management. In today's Tech Talk, we'll be focusing on inventory closing and recalculation, and part 6 will be focused on the new global inventory accounting added. We hope you'll join us for this additional Tech Talk about production variance analysis, which is scheduled for April 12th. Make sure to get signed up and to add this session to your calendar. We've also added a fireside chat to the list to help answer many of the questions that have been submitted that we've not had time to get to during the live sessions. Keep an eye out for that registration coming soon. Parts 1 through 4 have been recorded, and you can find those recordings on the Tech Talk Dynamics community page. We are back with another riddle of the day, and today's question is, what happened when the accountant tried to buy a drink? We invite you to post your answers into the Q&A panel, and we will reveal the answer at the end of today's presentation. So let's take a quick look at our agenda, and then we'll dive right in. We're going to start out by describing the inventory close process. This includes how to select options and actually performing the inventory close. You'll actually see a demonstration of that. We're also going to double click on that inventory close and walk you through all the details of how to review inventory settlements and adjustments and all the various outputs that come from an inventory close. Then we'll switch gears and take a look at the inventory recalculation process as well as the manual inventory adjustments process. We'll wrap it up with a review of how to analyze your inventory value and reconcile your inventory subledger to the ledger. As always, we'll wrap up today with resources and recommendations. And so make sure you stay through for all of that great content. So let's get started today with an overview of the inventory close process. Let's start by talking about why inventory close is so important. When you use a perpetual inventory costing model, the inventory close and adjustment process is critical to calculate the final cost and create vouchers to adjust the inventory value in your ledger. The primary job of the inventory close is to create settlements and post adjustments. Settlements are created for non-financial transfers as well to match the inventory model that you have selected. For example, when using FIFO, the system finds the transactions between inventory dimensions that are not marked with the financial checkbox on the dimension groups pages and creates settlements for all those transfers first before finding transactions for the actual FIFO settlements. In this way, the non-cost related movements of inventory are not considered in the FIFO settlement. Then the system will proceed to find the first receipt and first issue and create a settlement. Once the inventory is closed, you can no longer backdate any transactions. This is true of any inventory model that you use, and it's the primary reason why you should always run the inventory close no matter what inventory models you use. It is possible for any inventory transaction to have multiple settlements, and the system will not mark the value open field to equal no until the inventory transaction is fully settled. It's also important to note that inventory close is required in order to be able to use the new archive inventory transactions feature. The inventory close should be run at a minimum once per financial period. If your fiscal periods are set to calendar months, for example, then that means you should run the inventory close at least once per month. It is typically run with the last date in the financial period to ensure that balances are updated for your period end financial reporting. So let's take a quick look at the high-level process you should follow when preparing to close your inventory. Before you close the inventory, there are a number of things you should do to prepare your system. This is not an exhaustive list, but includes the most critical high-level steps. You'll want to make sure that all your transactions are closed and finalized in the period you're closing. This includes things like invoicing sales orders, purchase orders, ending production orders, and invoicing your projects, just as a few examples. Once you close the inventory, you will not be able to post product receipts, invoices, report as finished journals, picking list journals for production, and so on with dates that are prior to the close date. Before you run the inventory close, it is also strongly recommended to find and correct any negative inventory in your system if you allow your inventory to go negative. Once the books are ready and other transactions are finalized, you're ready to close the inventory. We recommend that you run the Check Open Quantities report first. This report will print a list of inventory transactions that will remain open after the inventory close is performed. You will primarily want to use this information to validate the open transactions. In many cases, you may need to wait for an invoice from a vendor or supplier, for example, to close the purchase orders. But if you see other types of receipts, you can likely close out the transactions prior to closing the inventory. Next, you will want to run the Check Cost Prices report. This report lets you enter a maximum deviation percentage and amount. Any transactions that appear on the report have exceeded that maximum deviation you entered. You'll typically want to investigate these transactions to determine if you need to make corrections to incorrect PO prices, for example, prior to running the inventory close and settling issues against those receipts. You can optionally run the pre-closing process to close out your non-financial transfers, but this will happen automatically even if you don't run it as a separate step. Once you're ready, you can run the close. After the close process has completed, which can take between minutes and a few hours depending on your transaction volume, you'll want to reconcile your inventory subledger to the ledger and finalize the period close activities. This includes stopping the ledger period in each legal entity, running the inventory value report and your trial balance report to compare your costs. You can also use the cost administration workspace and click the inventory statements and reconciliation to review and validate your subledger to the ledger. We'll talk more about this a little later on. We've pulled together a few high-level bits of advice for your inventory close process. The first recommendation is that you should define your close process and policies. For example, if you're going to allow AP 3 days to finalize invoices, AR will be finalized 1 day after the period end, then the inventory close process will be run once your AR and AP processes are complete as of the last day of the previous period. You'll want to make sure your business process is clearly documented and responsibilities are clear among your team. Next, we suggest that you consider using the financial period close workspace to help manage the process and prerequisites. You can include links to the pages and reports that need to be executed and keep track of progress. It also provides a mechanism to help keep backup for the various tasks that are being completed by your accounting team. We always recommend that you run an inventory close prior to your go live and conduct a mock month-end process as a part of your mock cutover. You'll want to practice and validate the reconciliation process as well to ensure that your reports and documentation have all the required data. If you're a public company, consider if you'll need an auditor to validate your new processes. One key consideration that you'll want to make for your inventory close process is the performance of the close process. As with all finance and operations deployments, we require a valid performance test prior to releasing the production environment for deployment. When thinking about inventory close from a performance perspective, there are 3 key considerations to keep in mind. First, you'll want to think about the frequency that you'll run the inventory close. At a minimum, it should be done once per financial period. You may need to run it more frequently based on your volume of transactions and based on your business processes to prevent the backdating of transactions. For example, you may want to run the process once per week. Next is the timing of when you run the inventory close. You'll want to carefully consider other processes that are running at the same time. So you should evaluate your batch schedule carefully. Also consider the other processes that are happening in your environment, such as integrations and user interactions. If possible, try to schedule the process to run during a slow time when there are not high volume activities happening in the system. Lastly is the batch helpers. If your inventory close is taking a long time to complete, you may need to evaluate the number of batch helpers and number of items in each batch. Let's take a closer look at those parameters. Here you can see a screenshot of the Inventory Accounting Parameters page found in the Cost Management module under the Inventory Accounting Policies Setup area. You can also find the same parameters in the Inventory and Warehouse Management Parameters page. The first set of parameters I want to talk about are in the closing group. First, you have the extra batch helpers. If this is set to 0, no additional batch helpers will be used when the close is run. You can think of a batch helper as a thread, allowing the process to be multi-threaded. The number of threads you should use is dependent on the size of your environment and the other things that are happening in your environment at the same time. 4 or 8 helpers is a good place to start. You will also want to select a batch group to assign the additional helpers to in the Helper Batch Group field. Keep in mind that batch groups can have different priorities assigned, and this can affect the performance as well. You will also want to specify the number of items to include in each bundle. This indicates how many items will be picked up by each thread at a time. Excuse me. For many organizations, 40 to 100 is a good starting point. If you have a very small number of items with really high transaction volumes, you may want to consider lowering this number. If you have lots of items with very few transactions, you might want to increase this number. There's not an exact science to setting these options, and your data will produce different results than another organization with a different transaction mix. So make sure you test your setting during your performance test. The second set of settings that I want to highlight are the settings for the KPI goals. These KPIs are displayed in the Cost Management Power BI reports. You can control the accuracy and rounding principle for the various KPIs. When you're ready to close the inventory, you'll click the Close Procedure button and then select Close Inventory. This will open the Close Inventory dialog. And here you can see the top half of the Close Inventory dialog page. The first thing you'll need to do is specify either a period code or a date to close inventory up to. We recommend that you create date interval codes in the General Ledger module so that you can select a period code. This is especially useful if you run the close automatically in a batch at specified intervals. If you don't specify a period code, you'll need to enter the closing date manually each time you run the close. Next, you'll need to select the specification. The most typical choice here is total, which creates one voucher for the entire inventory close based on the adjustments that are needed. You can also choose item group or item to get a breakdown by item group or specific item numbers. Keep in mind that the subledger inventory settlements will have the full details, and you normally don't need the details in the general ledger. Now, here on the right, you can see the bottom half of the close inventory dialog. You can specify the maximum number of iterations allowed and the minimum amount of adjustment allowed. When you have circularity in your BOM, this controls how long the inventory close process will run. A higher number gives a more accurate cost, but also affects performance. If you optionally select the Run Recalculation After Closing option, the system will close the inventory as of the date you specify. Then, on the system date, it will perform a recalculation. For example, if you close inventory on the 6th of the month for the prior period, the close will run for the last day of the prior period, and the recalculation will run for any transactions between the 1st and the 6th, adjusting them according to their inventory model. We'll explore recalculations in more detail later. But for now, I'm going to hand it over to Anne.
Thanks, Rachel. Now that we've talked about the different parts of the inventory close process and reviewed the inputs for the closing parameters, let's talk about the outputs of inventory close. Before we dive into examples and scenarios of the inventory close process, let's first discuss the basics of what an inventory close does. One of the things inventory close does is create settlements for all items that are set up to use a periodic cost model. This is the process of matching each issue from inventory to one or more receipts in inventory based on the heuristic specified by the item model group, such as FIFO, LIFO, etc. This will allow us to then calculate the final cost of our issue transactions. When settlements are created, the system creates two inventory settlement records and defines the principle or methodology, in other words, that was used to create the settlement. For example, when the principle will either be FIFO or marking when your costing methodology is FIFO. As you may remember from our second Tech Talk in this series, when we use weighted average or weighted average state, the inventory close process will generate pairs of transactions called weighted average close transactions. The receipt transaction in the pair will be settled against the issues from the period, and the issue transaction will be settled against the receipts from the period. These are used when the system uses the summary settlement method. In some circumstances for weighted average and weighted average state, the system will do a direct settlement between transactions, but this is a less common scenario. Once we know which receipt transactions are matched to our issues, we're able to update the cost of the issues to be the final amount. As a reminder from our Tech Talk on inventory accounting models, the physical and financial cost of an inventory transaction from an item using a periodic cost model is posted at the running average cost of inventory at the time of transaction posting. At inventory close, the settlements will tell us what the final cost should be, and the difference between the running average and the settled cost is posted as an adjustment on the transaction. While settlements are new records created by the close, these transactions align and relate to the actual inventory transactions that are the source of the settlements and adjustments. When this happens, several fields on the inventory transaction in the InventTrans table are updated. We'll review what these transaction updates are later in this section. You might recall this next slide from part 2 in our TechTalk series. You might also recall that in FIFO, we create settlements in a first in to first out pattern. But this doesn't happen in real time throughout the period. This only happens during the inventory close process. When we close inventory, the system will create settlements where the first receipt is matched against the first issue, and so on. The settlements and matching principle are based on the financial date of the inventory transactions. This diagram shows the settlements that we made with the red diagonal arrows. Most of the time, when transactions are occurring in the system, we will not have a one-to-one matchup of every receipt and issue. In this example, we will walk through the settlement process when we have transaction quantities that differ from transaction to transaction. In this picture, each box represents one unit of inventory. We are still assuming we're using a FIFO model in this case. Our first issue transaction for a quantity of 1 will be matched to 1 unit of our first receipt transaction. Our second issue transaction will have 2 units matched to the remaining 2 open units from the first receipt, and the third unit will be matched to the 1 unit in our second receipt. Our third issue transaction will match 1 unit to the last open unit of the second receipt, and the remaining 2 units to the third receipt. Our fourth issue transaction will be matched to 1 unit from the fourth receipt. The fourth and fifth receipts will remain value open equals yes after the close, since the full quantity of each transaction has not yet been settled. Now let's review the impact of inventory close on a set of transactions within our D365 system. The first thing we're going to do to understand the impact of the close is to look at our transaction set prior to closing. To do this, I'm going to navigate to the Release Products page. I'm going to select my product, which is this Fairy Perry throw blanket, and we're going to look at the transactions on the Manage Costs tab at the top. Our first set of transactions on PO number 2, we can see up there, are related to a product receipt that we canceled. So we'll see that they are value open equals no, meaning our close will not adjust the cost, and that there's no financial cost amount posted because this relates to a product receipt that was canceled and never invoiced. The third transaction for PO number 2 is the one that relates to the new product receipt and invoice that occurred in the system. We also have 2 transactions relating to a transfer journal that was posted throughout the period. This is another one of our transactions that will not be impacted by close. We can see it's noted by this non-financial transfer checkbox, and the value open equals no, that I will be left alone by close. The rest of these transactions contain purchase orders and sales orders that will be matched together as part of our inventory close process. In this particular case for this item, we have set up our item as a FIFO item. So when we look at the outputs of the close, we should keep in mind that we're using this first in, first out policy. Now to perform the close, we're going to go to the cost management module, and we're going to select closing and adjustment menu item to perform our close. To create the close, we're going to click Close Procedure and Close Inventory, assuming we've run all of our prerequisites. We'll set the current period as the period code to determine, in this one, we'll close inventory up through the end of the month. I am satisfied with the rest of my parameters, so I'm going to click OK. This will create a close record, and it's adding it to the batch queue to get the better performance as Rachel mentioned earlier when she was talking about parameters. When I'm looking at my inventory closes, I have the ability to view my records that are active or all my records, which can include reverse closes, for example. On the particular close record, on the general tab, I can see the different parameters that I set when I ran the close. And on the session tab, I can see my information about the close when I started the session for the batch job. And right now the end says 12 a.m., which just means that the batch job hasn't ended yet. We'll refresh this record, and now we see that the end is updated and my calculation status is ended, which means my close is complete. We get the OK check mark, so we can go look at what we got out of there. To do this, we're going to first click Details and Settlements to view the outputs of our close. We can see the different settlements that were created and the principal with which they were created. So for that BL001 item we looked at, they're all created with the principal mark FIFO. And we can see that the sales orders are adjusted because those are more issue transactions that are going to be settled against the purchase order transactions. We can see we have 2 transactions that were settled with principal marking for PL003, which means those orders were marked together. We also have the rest of those transactions which were settled with the weighted average principal, and we note that the weighted average inventory closing transactions were created, as I mentioned before, as an output of close to perform the summary settlements against the weighted average issue transactions. I have my total on the bottom of my adjustments, which we can see is negative $11.41, balancing out the positives and negatives of the adjustments done as part of this close. When I look at the voucher that was posted as a result, we see that it was posted for that amount of $11.41, which is the value, is a total value, which is the parameter that we set, as Rachel mentioned, when we ran the close. If we want to view the adjustments, we can also look at the adjustments report, which will print a screen. This is an SSRS report that shows us that same information in the settlement screen, but in an easy to export and print fashion. So here, now that the report's generated, we can see again, we have the transactions that were settled, the method that was used to settle them, the adjustment amounts, the total cost amounts, and the reference transactions for those adjustments and settlements. Now that we've seen the outputs of the close process, we'll go back to our release products and look at the transactions. So again, we'll go to the transactions page, and now we can see that several things have changed. We have changed the value open equals no on the majority of our transactions now as a result of the close because they're settled. We'll notice there are 2 transactions with value open equals yes. In the first case, this is because we've only settled the quantity of 21 out of the 40 on this purchase order. And on the last purchase order, number 6, we haven't settled any of that quantity because it's still on hand and hasn't been issued. So those 2 transactions will remain value open equals yes until we've issued and settled the full quantity. For our other transactions, we can see the settled quantity, and on the issues where there were adjustments, we can see what those adjustment amounts were in the adjustment field. The adjustment is the difference between the financial cost amount and the amount settled, which is the final cost of the transaction. If we want to see which receipts were settled against a particular issue, I can go up at the top, I can select the particular transaction and click Inventory Cost Explorer to see the settlements. Here we can see we settled against 2 purchase orders, PO number 2 for a quantity of 20 and PO number 4 for a quantity of 10, illustrating the point that we can have multiple receipts matched against a single issue and vice versa. It's important to note in this case, using the Cost Explorer, that we started from the issue transaction. If I were to pick a purchase transaction or a receipt transaction and click on the Cost Explorer again, What I would see in this case would be just the purchase order information, as we can see here. So we don't get that same level of detail. So it's important to know when we look at the cost explorer, we need to go from the issue transaction side. So now we can see here how transactions have been updated as a result of the close we performed, which again, we needed to do in order to get the FIFO settlements to be created after we posted at the running average throughout the period. With that, I am going to move to the next section, which is about inventory recalculation, which is performed through the same workspace as inventory close. Inventory recalculation is a useful tool to allow businesses to get more accurate cost reporting in the middle of the fiscal period by updating transaction costs to reflect the cost model heuristics with the current transaction data set. For all intents and purposes, the recalculation executes the same logic as the inventory close, except it does not create settlements and it does not mark transactions as value open equals no. You can still create transactions in our period because we haven't closed the inventory. The system will still create a voucher to adjust any transactions as if a settlement were being created, but the amount on the adjustment can still be changed if we run another recalculation or when we close our inventory. For example, if we're using weighted average and we did a recalculation, we'll get an adjustment. And then we receive additional inventory after the recalculation is run. When we close inventory, all of the issues throughout the period will be adjusted to match the new weighted average amount, including the transactions that happened after the recalculation. The recalculation does not stop inventory transactions from being posted in the recalculated period, unlike inventory close. So therefore, we can still backdate a transaction as needed within our current period, which is not possible, again, once you've run that close. Recalculations are typically run as a batch job on a more frequent basis than a close, especially when include physical value is used, since it allows us to update the cost of our issues once invoices have been received. When you run inventory recalculation, the process is very similar to that of the inventory close process. There are a few minor differences. The parameters are generally the same. However, the label on the date field reads recalculate inventory up to instead of close inventory up to. The main difference that we have with running a recalculation is that you can select particular item records to run the recalculation for. With an inventory close, we always execute it for every item, but we can filter to a subset of items when we're running a recalculation. It is important to note that if you run an inventory close with a close date that is earlier than the last recalculation date, you will be prompted to cancel the later recalculations. The system will automatically reverse the recalculations and close the inventory as of the close date. And if you want to run another recalculation, you can do that automatically or manually. When you run a close that has recalculation with dates prior to close, the close only creates a voucher if the adjustment amounts have changed since the last recalculation. Here we can see an example of our transaction set after we run the inventory recalculation. Note that we did get adjustments, but we did not get settled quantity and amounts because we didn't run the close, and value open is still yes on our transactions. With that, I am going to pass it back to Rachel.
Thanks, Anne. In addition to the close and recalculation process that Anne has just reviewed with you, there is another option called inventory adjustments. So let's take a closer look. The adjustment process is a manual process that's used typically to make corrections to the inventory cost of either on-hand inventory or a specific receipt transaction. When you post an adjustment, the system will still update the cost price and adjustment fields on the inventory transactions. You can only adjust the quantity of inventory that is on hand as of the date of the last close, or you can adjust a specific receipt transaction as long as it is still value open equals no. Generally, we recommend that you correct the source document transaction where possible, as updating the cost of a purchase order receipt by using the adjustment feature, for example, does not update the invoice amount or the liability owed to the vendor. When you post the adjustment, a voucher is created, just like with the close or the recalculation process. And this process is typically used on an as-needed basis. So we're going to switch over and do a quick demonstration. I'm going to show you how to post an adjustment for your inventory on hand. I will start out by navigating into the closing and adjustment form found in the cost management module. Here you can see the close that was last run on 3/31. I'm going to click on the adjustment button and choose on hand. Next, I'll need to use the select button to select the transactions that need to be adjusted. This opens up a dialog, and here I can choose which inventory dimensions I want to adjust by. And I'll need to click on the filter button to filter for my specific item. In this case, I've used the drop-down box to select my item BL003. This is the Sangria throw blanket. And I'll click OK and click OK again to confirm the transactions I want to adjust. Here you can see the posted quantity of 15, and the value of that inventory is at $2,250. The unit cost per item is currently at $150. I can manually type into the Edit Now field the exact amount I want to adjust by, or I can use the adjustment button. In my example, I'll select Fixed Cost Price. So for example, let's say I want to make the unit cost be $165 per unit. I'll click OK, and the system will populate the Edit Now column with the amount to be adjusted, and you can see the new unit cost will be $165. When I'm ready, I can click Post. This will open up a new dialog, and here you can see that the adjustment date is grayed out. On-hand adjustments are always posted as of the date of the last close. When you're ready, you click OK, and the system will post a new voucher for you along with the on-hand adjustment. Here I can see the on-hand adjustment dated 3/31 that was posted. If I select this and click Details and choose Settlements, I can see one record for the adjustment principal with my adjustment amount of $225. And if I click Voucher, I can see a matching voucher was created for the $225. If I click Inventory Transactions, I can see the original inventory transactions that were adjusted. And in the adjustment amount field is where I can see that my transactions were adjusted. Now you've seen how to adjust your on-hand inventory as of your last closing date. The final step in your inventory close process is to reconcile your inventory subledger to the general ledger. There are a variety of reports available in Dynamics 365 to help assist with this process. So let's review those now. The first report we will review is the inventory value report. This report is critical to reconciling your inventory to the general ledger. You'll need to create a layout that supports this task. You can also use this report to report on the on-hand quantities and values for your inventory. There's no limit to the number of report configurations you can create for various and specific reporting or analytical purposes. When you create a report layout, you can save that layout and reuse it each time you need to run the report. You also have the ability to filter the report by specific items, item groups, resources, resource groups, cost groups, and much more. When you run the report, you can choose to output the report like a standard SSRS report, or you can use the new report storage option. We recommend that you consider using this new feature as it allows more flexibility for exporting, drilling down, and much more. So let's switch over to the system and take a quick look at the process. In this demonstration, I'm going to show you how you set up inventory value report configurations and look at the results. Let's start by taking a look at the inventory reports configuration. You'll find it in the cost management module. Here, you can see I have set up two different report configurations. Let's first look at the one called month-end reconciliation. On the General tab, I've selected a date interval and a dimension set. The dimension set is used to calculate the financial balances of the main accounts. You'll notice down here, I have selected the print cumulative account values, and in the inventory account, I selected account number 149999, which is a total account that includes the individual inventory accounts in my chart, and that will be printed on the report. In this particular example, I've chosen to only show inventory. However, you can also display WIP if you have production, deferred COGS, and actual COGS, as well as your profit and loss values. And when each of these options is selected, you'll likely want to specify the main account that goes with it in the relating main account fields. Over on the right-hand side, you can see the inventory dimensions that are displayed in the report. In my case, I've selected to view and show totals by site and selected the option to view warehouse. In the Resource ID section, right below the inventory dimensions, you can select the behavior for the columns that will show up in your report. Resource IDs can vary when you select the option to view a resource ID. When referring to a row that is related to inventory, this would refer to the item number. If we're talking about labor components, the resource ID is the actual resource ID from the route. And if we're talking about indirect costs, this would be the cost group. When we think about resource groups, the view and total options are referring to item groups for materials, resource groups for labor, and cost group types for indirect costs. As you scroll down on this report, you'll see some additional options. You can choose to summarize your physical and financial values, which will add an additional column that sums up both of those columns. You can also choose to include transactions that are not posted to the ledger. Generally, for reconciliation purposes, you would not want to include this, but when you're running the report for analysis purposes, you might want to choose this option. You can also optionally choose to include the Calculate Average Unit Cost Price. When you select this option, another column will be added to the report that shows you the calculated average cost. It's important to note that when you're using weighted average or weighted average date, this is not the same thing. This column simply calculates the average based on the quantity and costs that are displayed in the report based on the date range you've selected. You can also select to print totals, including a quantity and value on each row that you display in your report. Down in the Rows Fast tab of the report, here you can see we have just selected the option to display materials. If your organization also has labor or indirect costs and direct outsourcing, you can select those options as well. This version of the report is set to totals, and when you select the totals option, you cannot select the include beginning balance. If we look at the other detailed version configured here, you'll notice that my options are primarily the same. However, this time I selected to print the total quantity and value, and I set the level of detail to transactions rather than totals down on the Rows Fast tab. I also selected the option to include beginning balances. When you're ready to run the report, you do this by running the inventory value report storage or the traditional SSRS report. Let's start by taking a look at the report storage. This is a great option to be able to easily export the values out to Excel to do additional analytics and reporting. You can see here that I've run the report from March of 22 with both of my different layouts. Let's look at the first report, which is the summarized reconciliation. I'll click on the View Details to see the detailed output. You can see I received one row for each of my resources. In this case, resources are items because I'm only printing the inventory. I can see my financial quantities and amounts. I don't have any physical quantities or amounts because all my transactions in this period were financially updated. And I can see the average unit cost, which is simply calculated by dividing my financial amount by the financial quantity. If we close this and go back and take a look at the detailed version, when I click View Details, you'll see that I now have a lot more rows in my report. Here, in this case, I can see every single transaction in the period. You'll notice that because I chose the option for beginning balance in this layout, I start out the report with 4 rows for each of my 4 items with the beginning balance. In this case, you'll notice that the beginning balance is 0, and this is because our items had no transactions prior to 3/1 for these particular items. Then I start to see all the detailed inventory transactions, and in this case, because we ran some inventory close and adjustments and reversals, I can see the inventory closing adjustments in and outs. As I scroll down through the report, I can see the actual detailed transactions along with their quantities and outs. And if I scroll over to the right, you can see that we have the inventory quantity total and total dollar amounts. When you want to export the report out to Excel, you can quickly and easily do this by using the Open in Microsoft Office button and then selecting the Inventory Value Report option. One key thing that's important to note is that there are some significant differences between running the report in the storage version and when you run it into the SSRS version. So I'm going to select to run the Inventory Value Report as an SSRS report. For my example, I'm going to use the month-end reconciliation for the current period, and I'm going to print this to my screen. So I'll click OK, and the report will generate to my screen. We generally recommend that when you run this report, you select or run it in batch mode, especially if you have a large volume of transactions. Once this report generates to my screen, I'll zoom in a little bit so we can see the report a little bit better. You'll notice that I have a material header here, and I'm seeing 1 row for each of my items. You'll notice that even though I selected the option for warehouse, I receive a column here. However, it's left blank, and this is because my item is not configured to financially track inventory at the warehouse level. You can see what the ending balances are with the financial quantities amounts and the physical quantities and amounts. At the bottom of the report, you'll notice another difference. It's showing the GL totals down below the inventory details area. You can see the 2 inventory accounts that make up my total account 149999, which is my raw materials and finished good inventory accounts. You can see the totals in these accounts, and in this case, you can see there's a discrepancy. We'll take a closer look at this shortly. The next report that you're likely to use in your reconciling process is the inventory aging report. When you run this report, you can specify periods for the aging buckets that will sort the inventory into columns for how long the items have been in inventory. This report can be useful for validating items with long shelf life and more. This report is available as a standard output or the report storage option, which is what is shown here on screen. For the inventory reconciliation process, one easy way to validate and reconcile the inventory is to use the Cost Administration workspace. On the Pending Work and Statements Fast tab, you can click the Inventory Statements and Reconciliation tab to get a quick real-time view of the inventory subledger and ledger. In an ideal world, the difference will always be 0 on the reconciliation tiles for the inventory and the WIP production. When there is a difference, you'll want to run the List of Potential Conflicts Inventory and General Ledger report. And you can do this easily by clicking on the small report icon on the right of the difference field in the workspace. Here you can see a sample of the List of Potential Conflicts Inventory and General Ledger report that was run for March of 2022. Again, in an ideal and perfect world, this report would always show no discrepancy. You can use the information in this report to further troubleshoot any issues that are causing an imbalance between the ledger and subledger. There are a variety of these reports available throughout the system to help reconcile the subledgers to the ledger and troubleshoot when there is a problem. The example shown here shows that transactions are incorrect because the setting for post-physical inventory was changed on the item model group in the middle of the period. Now I'm going to hand it back over to Anne to wrap us up today.
All right, let's get into our resources and recommendations. We'll start it off with our do's and don'ts slide. On the do side, our first thing is we do recommend you run your inventory close once per period. This shouldn't be the first time you've heard this if you've come to our earlier tech talks, but we can't stress enough that we do recommend you run the inventory close, even if you're using moving average or standard cost as a method, because it closes your period for transactions. It prevents additional transactions from being backdated and posted, and it is required in order to use the inventory archive transactions function. We also recommend that you reconcile your inventory after closing. You're going to want to understand if there are any discrepancies, such as we saw today, and make sure that you can explain them and alleviate them if possible. We recommend that you consider recalculation regularly throughout the period so that you can update your issued transactions to be more realistically priced as the period goes on. We do recommend that you consider using the financial period close workspace to manage the period end process. The workflows, etc., really help make that process be managed a little bit more smoothly. So we definitely recommend. As we sort of mentioned already, we recommend that you resolve any balance discrepancies each period using the reports that Rachel mentioned to understand where those discrepancies came from and then resolving them. We recommend that if you need to adjust or correct cost data, instead of using the adjustments, you should always correct the source transaction wherever possible. So correcting the purchase order line instead of posting an adjustment, because as Rachel mentioned earlier, correcting the purchase order line allows us to change liability owed to the vendor, etc., whereas an adjustment is a standalone adjustment. On the don't sides, we have a few relating to the implementation process. Our first is we don't recommend that you go live without testing inventory close. Since this is a process that we recommend everyone executes, it's really important to make sure that you test it as you test all of your SOPs and that you understand what that process will be going forward. For the same reason, we recommend that you don't go live without practicing reconciling your inventory, especially if that process is going to change at all between your legacy system and your new implementation of D365. We don't recommend that you go live without testing the beginning balance load. This absolutely should be included as part of your mock cutover process, and you'll want to make sure that you understand the outputs and can validate that they are correct. We don't recommend that you use the invent sum, also known as the on-hand inventory view, as a replacement for invent trans or inventory transactions when it comes to cost information. Invent trans is the source of truth for costing, and invent sum simply shows us from a physical inventory perspective what we have on hand at a given moment in time. So we definitely don't recommend that you use invent sum as a replacement for cost information that you should be getting from the invent trans table. As far as inventory adjustments go, we don't recommend that you make them without consulting your finance department. You'll want to make sure that you're letting people know that you're creating them and that it is the right approach to take given the specific situation. As far as the additional resources go, they are the same general resources that we had in each of our series sessions. The previous recordings from earlier sessions in this series can be found at aka.ms/costing tech talks. We continue to load the recordings after we have performed the sessions. We have a link to the cost management homepage on the Microsoft Docs site, which contains various articles that relate to the content that we've covered and more. We have a link to the Yammer Insider program where you can connect with other users, partners, and the product team to provide your feedback and ask questions about cost accounting and cost management, among other areas. And of course, we always welcome your feedback and insight on how the product can be improved, especially in this particular area that Rachel and I are so passionate about. So if you have feedback for us, please do put an idea in on the ideas list, which we've linked here. And if you have time, go through and look at the existing ideas and upvote anything that you think is important. We are continuing to ask for your feedback for additional sessions that we could do in this series that you would be interested in. You can vote at aka.ms/D365 Costing Tech Talks. As you can see, we've had a really good response rate so far, so really thankful for the votes and the feedback from everyone. Which will bring us back now to the riddle of the day. What happened when the accountant tried to buy a drink?
I don't know, Anne. What did happen?
The bartender said, "Sorry, we're closed."
It's a closed joke. You see what we did there? It's like belly laughing. Fantastic. Awful, fantastic. Same difference.
Yes. So with that, we won't torture you with our jokes any longer. We'll move on to the questions phase. So we have a few. The first question, Rachel, is for you. When do we use the on-hand inventory adjustment instead of the inventory transactions adjustment, and vice versa?
Great question. So the on-hand inventory adjustment can only be done after an inventory close is done, and it will only adjust the quantities that remain on hand, for those receipts. When you do a transaction adjustment, it has to be done before an inventory close, and you're selecting a specific receipt transaction that needs to be updated. So if you're trying to revalue what you still have on hand, that's the on-hand adjustment. If you found a specific purchase order that needs a correction, you'll want to use the transaction option, and it must be done before the close is performed.
Right. I'll take this next one. The question is, can we check against which receipt transactions, issue transactions were settled? So we showed the Cost Explorer in an earlier demo in this session where we went from the issue transaction to see which receipt transactions were settled against it. We can also view settlements from that same transaction view and look at the pair of receipt and issue transactions that have been settled. Rachel, anything you want to add there?
Yeah, I think just to be maybe slightly more specific, it's the settlement button. So the Cost Explorer button that we showed does not allow you to see the issues from a receipt, but if you use the settlement button, you will always see the pair.
Yep. Perfect. We have someone again asking about posting profiles. Rachel, I'll give you that over to you to pitch your upcoming Tech Talk series.
Yes, keep an eye out. Make sure you're registered to receive alerts and notifications for new Tech Talks. It is in the works. We thank you for your grace and patience while we diligently work on hundreds of pages of new docs articles and a series that will be much like this series with many different parts. If you are looking for something short and quick, I did do a session last week for DynamicsCon. That's like a short preview of an introduction to posting profiles. It probably doesn't answer your specific questions about inventory posting profiles, but it is in the works, and we hope you'll join us for it.
Here's another one. Inventory aging report considers a transfer between warehouses and renews the inventory ages, which is not reflecting the business in real life. Is there a way to handle this situation on the report?
And I don't have an answer for this. I don't know if you have any suggestions. I don't know if you've tried running the report without the warehouse dimension. But
yeah, I don't have an answer either, Rachel, but I can say you could try reaching out in the Yammer group, and if your testing doesn't show any way, then posting an idea on the idea site and getting votes is another way to raise it to the attention of the product group. But thank you for the question and the feedback. And then we have a question, is there a best practice guideline for changing an item group as it relates to inventory closing?
Great question. I believe it was part 2, and keep me honest, of our Tech Talk series where we talked about it. We were specifically giving guidance around item model groups, but the same basic recommendations apply to item groups as well. Although the system actually allows you to make direct edits to item groups midstream, we don't generally recommend you do that. You should go through a close process, zero out your inventory, make the changes that are necessary and bring inventory back in, or at a very bare minimum, close out the period before you make changes. But that's the general recommendation. I'm pretty sure that was part 2 that we covered that in this series.
Yeah. So if you were looking for a recording on the process for changing item model groups, storage dimension groups, or tracking dimension groups, you can find that in the second recording of the Tech Talk series. We have a question about somebody wanting to see the report where you have potential conflicts in what looks like a workspace view.
So I'm not sure if this is the slide that you're talking about. So here next to the difference is where you can click the icon to access the potential conflicts report. That potential conflicts report is also found on the menu, so you can just search for it, and there's a variety of different potential conflicts reports. And the potential conflicts report itself is here on the slide. So obviously the comments that you'll see here will differ and vary depending on what the issue is. In our example, we actually went in and purposely changed the post physical inventory flag. So you see the same message over and over and over on the report because we changed that setting mid process so that the report would show some results. But ideally you would want this to be 0, and you would want to show nothing, and you would want the differences to be 0 as well. Hopefully that answers the question. It looks like that is all the questions that we have in the queue. So with that, we will hand it back over to David to wrap us up today. So thank you everyone for joining.
Thanks, Anne, and thanks, Rachel. I've posted a link to a short survey in the Q&A panel. We'd like your feedback on today's session and hear what you'd like to see in future events. Thank you for your participation. As a reminder, the recording of today's session will be available on the Tech Talks Community Dynamics page within 5 business days. I'd like to extend a big thank you to our presenters and audience for joining us today.